I got y'all right here on the 4 hourly chart. If y'all watched my previous video, you noticed that I gave y'all 3 options, and obviously we got the best case scenario, and it played it straight to the T. So once again, we're looking at 3 options again. So anyways, what we're looking at for the best case scenario is us coming down here, hitting this 100 EMA on the 4 hourly, and then bouncing off, and we'll be making our way up towards our next resistance level, which will be around $27,000, right? On the other hand, we could actually fall. We could own this during this retracement if we go below the 100 EMA and we fall below this line right here, which is around 21,500. That general zone, we could be falling to the next support level, all the way down to $14,000. Now, on the other hand, if we come up here, right, and we don't make the direct move up, right, we'll get a retracement halfway down to 22,500 range, and then a second attempt, and then a retracement all the way back to 14,000 again, because we'll be heading right back around this number. Like I say, anytime it's around 21,500, we're looking for a very, very steep drop. So let me show y'all a longer time frame so y'all can see where I'm coming from. Alright, on a higher time frame, as y'all can see, we made the move with the triple bottom right here. So we confirmed the triple bottom. We came up, hit the 50 EMA, like I said. Now we're in that retracement, like I mentioned in my previous video. So we're gonna come down, hit this 20 EMA, which is the same EMA I just basically mentioned, but this 20 EMA, which is the red line above this line. Like we cannot fall below this line. This is confirmation. Once we bounce off this and we bounce through the 50 EMA, okay, that's when the issue comes through. This is how I know it'll be a drop again, because we come to the 50 EMA, we'll get a retracement, and then we'll try for the third time, and we will fail, and we'll be going downward. So as you can see, we have a possibility of actually breaking up and then going up to our next level to recover this candlestick right here. Like I say, that's around 27,000. That is why I got that number marked. And I have this down here because we won't be able to break past the 50 EMA. That is also a possibility. And at the end of the day, if we wasn't making the drop, it'll either be a head and shoulders or M formation for a steep drop. Those are real options we have right now. So like I say, best case scenario, recovery this candlestick right here around 27,000 after retracement to bounce off this 20 EMA on the daily. But we, like I said, once again, we cannot go below 21,500 because that's just signaling a steep drop, because we still looking at a head and shoulders formation right here, a possibility, just a bit larger one, you know, because it is a, like I said, a triple bottom, so it could go either way at any point in time. So y'all got to be careful until you get this confirmation of a bounce out this 50 EMA. But let me show you the overall time period. Like on a weekly, as y'all can see, we was to make that move up, right? That will recover this candlestick, and also it'll be a tap to this 100 EMA on the weekly and a tap to the 20 EMA on the weekly, which is something we have to do, because as you can see up here, we came up and tapped the 50 EMA before we made this crazy drop all the way down here, and now we're having a reversal to tap this EMA and reverse back down. And I believe once we do hit this tap right here, which is a possibility up to 27,000, 28,000, we can actually get up here. We will see probably the steepest drop, like I said, the final drop we've been waiting for, because there's nothing else holding anything else up basically. But we're definitely coming down to $10,000, like I said before, for the recovery of this whole head and shoulder formation. It always has to come back down where it started, so it's definitely going to 10,000. But like I said, when this drop happens, it's going to drop all the way down here to around $5,500, and a quick recovery back up above $10,000. And I say that because on the monthly, there's a clear pattern right here. It's the M to the dub retracement continuation. That's what's happening right here. So you have to have a close above $10,000 to confirm this pattern, and the pattern is already basically confirmed. I mean, it's clear as day. That's how Bitcoin patterns is in the smaller time frames also, just like this, because of this wick. It's always on the right hand side right before the reversal. So this wick right here we see right here. See how it went straight through the exact same zones? This is what we're looking at. We're gonna see a candlestick right here for a monthly chart, and it's going to start next month. So we're going to get a spike up here, I believe, like I say, around $28,000, and then we will see that crash that I've been talking about, that you've been waiting for for the longest, and it's going to be fast, just like this. You see this candlestick now? That thing went all the way down to $3,500 and recovered all the way back up above $10,000. So, I mean, it's easy. You see what's been happening recently, and it just got a long drop. And it's just because we need to recover these candlesticks right here. I'll do on a smaller time frame. So, yeah. Anything I just said is not financial advice at all. Y'all grown. Y'all make your own decisions. But like, comment, and subscribe. Peace.